Balber, from the Executive Director of Consumer Watchdog. Thank you. She's here with us today, and when you're ready, you may proceed. Sam, you have 5 minutes. Let's see if we can keep it under five. Thank you.
Thank you, Chair Rubio and members. I'm glad to be here today. The number one thing we hear from homeowners who lost their homes in the LA fires is, what can I do to make sure I get insurance when I rebuild? So we would urge you, first and foremost, to get tough with the insurance industry and require them to sell coverage to Californians who build back better or bring their existing homes up to state safer from wildfire guidelines. That is how we're going to get people back into the private insurance market. And as we wait for my slides to get up, I'll just jump in because I know we're crunched. I want to start with Prop 103 because every insurance company in the state has said it has the resources to pay its LA fire claims. And that might have surprised a few people who were hearing from the insurance industry that they were going broke. The reality is that insurers are doing far better financially in California than they have led us all to believe. Prop 103, as you mentioned, was written by Consumer Watchdog's founder. It has a very simple premise that transparency will make rates fairer and insurance companies more honest. So it requires a few simple things. Insurance companies to open their books, justify rate increases when they are asking for them, and get approval from the insurance commissioner before those rate increases go into effect. That transparency requires insurance companies to keep rates fair, and in return, the insurance commissioner has to approve rates that companies can justify. And the public has a right to participate in that process. And that public approval process, according to the Consumer Federation of America, has saved drivers in California $154 billion since the law was enacted. Consumer Watchdog, in participating in rate reviews at the Department of Insurance, has over the last 22 years saved drivers and homeowners $6.5 billion in what would have otherwise been excessive rate increases. So those are big returns for consumers. But the insurance industry, of course, has blamed those regulations for their actions in abandoning whole parts of the state. As I said, insurance companies have been more profitable in California than they have been nationwide. And I'm not sure exactly the slide number, but you do have the slides in your packet. One of those shows that the insurance companies, the home insurance companies, particularly in California, have made a greater return on net worth. That's not only their premiums in, claims out, but also critically their investment income. Over the last 2 decades, 3 points higher than the national average. And that gap got even greater if you look at insurance companies' returns over recent years in California. But the insurance industry has been holding California over a barrel. I want to point out as well that under the existing regulations, I think this is your next slide, 9 of the top 10 insurance companies in California have asked for and received double-digit rate increases. Many of them have received several rate increases, and this is under the existing regulations. But the industry is still claiming that rolling back consumer protection rules was the only way to get Californians insured again. Unfortunately, the commissioner's plan enacted all of those consumer protection rollbacks that the insurance industry asked for. They include black box models, catastrophe models to raise premiums. We don't have a problem with models, but we have a problem with the fact that their calculations on wildfire risk are completely secret. The commissioner also implemented new rules that will allow insurance companies to charge consumers for the unregulated cost of reinsurance. And while the Department of Insurance did not do a cost analysis on that regulation, we can look to other states to see the impact of that. It is an average 30 to 50% rate increase in other states that allow pass-throughs of reinsurance costs. And thank you. There's a slide in there that just points to State Farm as an example of how bad this is for consumers. State Farm buys reinsurance from its parent company. It's a very cozy transaction. And in the last decade, the company has not, that reinsurance purchase has not benefited California policyholders. In fact, it benefited the parent company to the tune of $3 billion sent out of state. That's the kind of market we're living in, where insurance companies are taking advantage of California, and in State Farm's case, sending money out of state. My written testimony also goes into more detail about why the loopholes in the regulation The insurance commissioner put forward to require insurance companies
You
to
need to
sell
wrap it up.
more.
Thank you.
I will do that. Will not protect Californians. So I guess I will just end on a few solutions, which is number one, I really appreciate some of the proposals that members of this committee have put forward. Other members of the legislature, we support several of them, but we really would stress a few. A public wildfire catastrophe model, so we all have access to that information. A mandate that insurance companies cover people who mitigate their homes. That, of course, is going to need more funding for that mitigation. And we need, Chair, I appreciate your bill that would create community wildfire hardening standards as well. And I'll end it there.
Okay, well, thank you so much. I know we're running already behind, as always is the case. I'm going to just turn it over to our colleagues, but we will keep it to questions and not so much statements, if you can make that consistent. Okay. Thank you.
Well, first and foremost, I want to say that this hearing is incredibly needed, and we should actually expand on this to give you a little bit more time. You say that the catastrophe formula is not transparent, and even though that's through our insurance commissioner, have you requested documentation? Has there been any PRAs to kind of see what that formula entails?
So under Prop 103, everything that goes into an insurance rate is supposed to be public. And the reason insurance companies have not used catastrophe models to predict future risk in the past is because the private modeling companies will not allow their secret sauce to be made public. And so we have, for the last year and a half, as the commissioner was implementing his sustainable insurance strategy, pushed for the commissioner to require those models to be made public. His regulations did not require that. He did create a process for pseudo review of models. However, it is completely in a black box. That information will never be made public. The participants have to sign NDAs, in fact.
With the amount of data mining that is out there, both by insurance companies that are targeting, regions and charging more for this region versus that region, as well as just algorithms being utilized, do we believe that there is some artificial intelligence and some, data mining evidence that is being utilized by both insurance companies and potentially this modeling that the insurance commissioner is doing?
Well, one of the companies is actually called Zesty AI, so there's definitely AI involved. On one level, data about your home is important for your insurance rate. We do want insurance companies to have up-to-date information about the status of your home. The problem right now is, in fact, when they get that information, say you correct them that there is not mold on your roof from the video that they took overhead 2 months ago, they don't act on that information. So there's a real problem with getting that information correct. And then, yes, because we don't know what's going on in the black box, we don't know if companies are using the information they have accurately or if the information is correct.
And they cancel insurance without the opportunity for the property owner to have a moment to cure the issue, correct?
Absolutely. I think that's a great place where reform is needed.
We have a bill on that. Thank you.
Yeah.
Real quickly, any other members wishing to speak? And I know that we already had Michael Martinez speak. Is there anything that you want to share in regards to some of the comments that were made? You don't have to. I just wanted to give you that opportunity.
Thank you. Mike Peterson from the Department of Insurance. So the PRID process, the model review process that was referenced, is one that was set up through our regulations. We have had 4 modeling companies petition to be part of a PRID, and we have participants from the public who can petition to participate within that model review process. Thank you.
Thank you. So we want to thank all the participants. Thank you for coming today, and those that were joining us via Zoom. We will move now to